Good afternoon, everybody. This is Paul speaking. Hi, everyone. Good to see you all. Chart knowledge assessment. I'll probably, fill up the whole hour like I usually do. So I'm going to get going here right away. And as I was going through this, it kind of almost takes the form of a little bit of a quiz almost, which may come across the wrong way or, not sit right with some of you. And it's certainly not what I want to do. So I thought, about what is the purpose that I'm trying to do. And I know what the purpose is, but I thought I'd put the purpose out here first so it can be clear. So let's take a look at that. And the title of that, here's the slide that I think you saw somewhere or was sent around. There are definitely things that are right and wrong in technical analysis, also known as the study of charts. Within what is right, there are many different ways to make money, and all are acceptable. However, most traders, investors get stuck on wrong concepts. That's part of the issue tonight. Those of you that know me know that I do not advocate like it's my way or the highway. I have a particular style that I've focused on, and it's kind of a subset of what I teach. In other words, you can take what I teach and then kind of, specialize in wherever you want to. This is something that I think was clearly demonstrated in that kind of famous book called Market Wizards by Jack Schwager. It's kind of an older book at this point, and I really didn't feel it was a very educational book in most ways, except it had a couple of great points to it. And one of those points was that Schwager was interviewing 25 successful traders trying to find the common technical concept that they did so he could just mimic them rather than learn the market at all. And what he found that was so amazing was that from a technical point of view, they had nothing in common. In other words, they all did something unique. And that doesn't surprise me at all. The consistent thing they had was they all had focused on a specific concept and they stuck to it with great patience. So I think there are different ways to make money, but they all follow certain acceptable, correct concepts, if that makes any sense. Does that make sense what I'm saying? And therefore, there are things that are just wrong, period. Like I can identify things that are wrong that you will never make money doing. And I guess that's maybe the thought process that I'm running down here today, is not to say, here's what you have to do, but to say, here's some really common things that, people maybe don't get right. So let's dive into this even more. This is called lots of boring but necessary words for today's event. Let me ask you something. Somebody who lays floor tile for a living or is a bricklayer, do they have an objective job or a subjective job? I know that's an awkward question. I'll zero in some more. Do they have an objective job or a subjective job? And you're saying objective because you could teach somebody, or a good tile layer, let's say, because that's what the picture is, could teach somebody how to lay floor tile, right? And there's a certain pretty exact procedure. You mix the powder and the water and this consistency and you spread it this way or that way, right? So there's a very consistent thing. And the same thing with a person who puts up drywall. Let me ask you something. I kind of like construction stuff if you haven't noticed. I like doing stuff like that. Have you ever seen a professional drywall taper? If you don't even know what that is, when you put up drywall, you're a bricklayer. Cool, very cool. Well, you'll like my comment here. When you put up drywall, it comes in sheets, like 4x8 sheets. And you put it on the wall, and between the drywall, there's a crack. And you have to fill it in and tape it, right? Have you ever seen somebody do that? Seriously, have you ever seen a real professional do that? A long time ago, I had a basement, and I refinished my basement. And I did my drywall, and I started to tape it. And I knew how to tape it. I watched somebody, I studied. I think at the time I did it, I don't think there was a YouTube video to learn from. And I know how to do it, right? And I did a couple of walls, and I was like, holy cow, I'm going to pay somebody to do this, because this is going to take me, like 2 weeks. It was taking me forever. I'm putting it on and sanding, putting more on, sanding. A guy came over, and he did my entire basement in about 3 hours. Absolutely unbelievable. You wouldn't even recognize what he was doing. When professional drywall, they don't even use sandpaper. It's not even part of the process. It's not even a tool. Unbelievable. My point is that while these are, in a sense, very objective jobs, like Jackson, you're a bricklayer, right? You could theoretically teach somebody to lay bricks, but the truth of it is there's a tremendous amount of art involved, And you'll see that in the difference between any professional and any new person. Technical analysis is the art of reading the chart. Thinking of it as a 100% objective quest is slightly incorrect. The goal is to be as objective as possible, but there's always some art involved, is what that should say. Whether a person lays floor tile for a living or is an attorney, there are definitely correct and incorrect ways to do things, but beyond that, there is an art that separates the truly excellent from the barely adequate. That says a lot about what I'm trying to get across here. You can read a book or study it a little bit and get the basics of technical analysis, and for most people, just quite honestly, they learn enough to lose money at a pretty fast rate. But it's like anything else. It's like me, taping my own drywall many years ago. Somebody literally did it 20 times faster than me, maybe 30 times faster, I don't even know. And technical analysis is the only way to make money in the market for 99.9% of you listening to me. Understanding news, economy, or the fundamentals of companies is not just secondary to the charts. These items are not only completely worthless in your quest to understand what prices are doing, they are detrimental. Before I finish reading that even, do you know why sometimes, back at the company I was at years ago, you know why I couldn't say that? Anybody have a guess why? And this will scare you a little bit. You know why I couldn't say that? I'm saying words very specific here. News, fundamentals, economy, studying those things are not only unnecessary, they will hurt you in trying to understand how to make money in the market. Couldn't say that. Anybody want to take a guess why? It was because there are so many people that believe in these things. Yeah, exactly. It's a sales thing. There are too many people that believe these things, and therefore they'll be turned off by what you have to say. Well, that's the cool thing now. I really don't care. I mean, I want to help the people who want to learn. And if you are not willing to accept some of the things I say, I think you're going to be struggling. But it is what it was. It's kind of like being in politics, when 51% of the country is for gay marriage and you're for gay marriage. That's kind of what you do as a politician. And that's what a lot of, bigger companies are. They don't want to offend anybody, so let's just work around it and teach it a little bit. Well, I'm not going to do that. If there were, I have nothing against any one of those things. As a matter of fact, I'm a pretty good student of the economy, but it is just simply something that will never help you to understand charts, and it will, in very many ways, hurt you and confuse you. We want to simply see, and let me finish reading because it really probably says better than I could ramble on here. You may not believe that today, but you will at some point in the future if you continue your quest. If it helps you, it's not that charts ignore or disagree with the news, economy, or fundamentals. Let me read that intro line again. If it helps you, it's not that the charts ignore or disagree with the news, economy, or fundamentals. It is that the chart has engulfed all of these things and has already digested future information to an extent that you can never understand. That is why everybody gets the market backwards. That's why 90% lose to 10%. Does this make sense to any of you? Well, that's good, Ella. I mean, you know what, Ella? Many people listen to me. Many of you here, I understand I'm preaching to the choir, and I understand that. And just, please bear with me and smile and say, Paul, I've been there, done that, and I'm 100% with you. As a matter of fact, if you want to say 100% agree, say 100% agree. But there's some people, Ella, that think I'm a little wacky right now, or probably already tuned out. And there's some people that I call them closet fundamentalists. And what they are is like, they'll sit here and say, yeah, I believe you, Paul. And you know what they do, though? They go and they study this stuff. And because they think it's going to help, because they never really get a full handle on charts. But this last line here is what I want you to understand. It's not necessarily that stuff is wrong or bad or whatever. It's just that you can't make money from it because the chart has digested this. Next slide. And one more slide on this. And unfortunately, within the world of technical analysis, coming up short of the information needed to really understand the chart means that you will likely lose and be frustrated. Also, there is the fact that chart reading can only take you so far. You may not hear that all the time. We can't read a chart with 100% certainty. We read it for probabilities. We can't read a chart with 100% certainty. We read it for probabilities. That means there's also a concept of mathematical probabilities and psychology that has to be understood in order to fully maximize your ability to make money in the market. Does all that make sense? Should I go back over anything? Are we good? I almost want to go back from the beginning and start, but those of you who logged in late, when the recording comes out, at least listen to the first 5 minutes of this, okay? Got it? Those of you who came in late? Because I think fully appreciate what I'm going to do here, it's to understand that's the goal, is that for you to understand what I'm saying there. And these are all things necessary to maximize your ability to make money in the market. Now that I said all that, I don't want to scare you. It's not hard. It's not hard to do. But it does take more than 10 minutes of watching some video somewhere. Finally, with all that said, let's take a look at a few topics. Please understand that my goal is not to teach you technical analysis tonight. That is something you must commit to over a period of time. But these examples will show you what the above words mean to some extent. If you're learning on your own, this will help a lot. Again, if you're learning on your own, I'm here to help you all that I can. And if this helps promote you to learn more on your own, that's great. If it helps promote you to decide maybe it's time to get help, that's great too, whatever you want to do. Also, clearly, and here's an important point that I want to say. Clearly, you can find charts that make your point or negate someone else's point, right? No matter what I'm about to show you or teach you or tell you, I can find a chart that quote unquote proves it, right? And if you want to argue with me, you can find a chart where it doesn't work. I am showing you what I know to be the typical outcome, the highest odds event. And this is from me 20 years staring at charts every single day. There's nothing to sell you, just to educate and share some experience, or in some cases, perhaps open your eyes to something to make you go, something you maybe hadn't thought about before, okay? So with that, I'm ready for question number 1. Are we all set, ready to go? I actually have like 5 questions here, and I just want to bring out some points. This first one here is actually a non-chart question. I just thought I'd throw it in here to get you warmed up. It's going to be multiple choice answers. And I'll give you a countdown, but I really don't care if you want to answer early. I'm not going to throw you out of the room. So let's start. Question number 1. Once you have taken share size in a bullish position, size to the amount of money you intended to risk, which of these is correct? A, if the stock moves up in your direction, so you're making money, you may add shares to the position and raise your stop. This is known as averaging up, and it raises your average cost of entry. B, if the stock moves down against your direction, you may add shares to the position. This is known as averaging down and keeps your average cost of entry very close to the current price. C, both are good management ideas, good management strategies. The answer to this question is absolute. There is no discussing this answer. And I think most of you will know this answer and understand it and get it. But if there's even 3 people in here who I open their eyes to this, it'll be worthwhile to me, because there are some people who there's just some stuff you'll learn that's just wrong. It's just dead wrong. Give you guys a second to fully do this. So you've taken a position. It's a bullish position. You've taken the share size already, size to the amount of money you tend to risk. So if you're going to risk $100, you've taken X number of shares. If it hits your stop, you're going to lose $100. If it moves up, you can add and raise a stop, but you're averaging your average cost up. If it moves down, you can add shares and move your average cost down. Both are good ideas. The answer to this question is A and only A, and not B. B is called averaging down. There's a lot of names for it. You may have heard it given some funny names like market making style or ATMing. Averaging down is a sin in trading and is guaranteed to blow out your account. Now, I don't use these words lightly. I'm not trying to be dramatic. It can be demonstrated to be accurate. Now, somebody could show you doing this a few times because it has a very high batting average, but it's not possible to make money in the long term. It's a statistical certainty. I explained this in one of the classes, but note that averaging into a position was not one of the choices that is acceptable. Averaging into a position, and maybe if you put C, maybe this is what you were thinking of, is that you start off so light in the position, then you can add on the way down and yet still be maintaining your maximum risk amount. The key to this question was that it said you have fully share sized the position, and once you've done that, you never add to it beyond that and continue to add, trying to save a bad trade, because it actually was hysterical. I was talking about this one time, and somebody sent me a YouTube video of a guy who was doing this, and he was not warning people about it. He was bragging about it because he made $800, and in the trade he was down $22,000. And had the stock gone down some more, he would have been down way more than that. And he came back to make $900. And he was proud of this fact. So be very aware of this. This is just kind of a warning because I've had several people who have told me that they've been involved with this and have had serious consequences from it. All right. A chart. It's 5:20 and you finally get to see a chart. Here's the chart. I'm going to show you the question. I'll come back to the chart. This is a 60-minute chart, and the pertinent area is covered up to the right. In other words, what's going to happen here. Here's the daily chart, and that daily kind of green bar there is what you're seeing at the moment that this stock kind of popped right here. The issue is this. We have this gray line representing the high of the last couple days, 3 days actually, well 2.5 days, and we are breaking out above that 3-day consolidation. Now, there's one issue I want you to focus on here. I know I read you the question, I'll read it, but I'm not concerned about whether you like the strategy, don't like the strategy, whatever you think of it. There's one question. And that is that as we break out here and we look to our left, is this going to be, what is the resistance situation here if I want to be long? So let me read the question. We'll come back to the chart. And again, whenever you feel like it. On the prior chart, if you go long at 1 on a break above the prior 2 trading days, regardless of any other concepts in the chart with regard to resistance, this chart is set up in a way that A, there will be a huge amount of resistance on the daily and hourly chart from the prior week. B, there will be very little resistance on the daily and hourly chart from the prior week because there is a void. Or C, there will be almost no resistance, making this a nice long as there is a tradable void. So we're saying you break above here, right? And you look to your left and you have this. And the question is, as you try to move up here, and again, I don't care if you like this strategy, don't like it, that's not the question. The question is just in terms of resistance, is there going to be a lot of sellers? Is there going to be a lot of resistance here or not? And the answers were A, a lot of resistance, B, very little resistance because there is a void, or C, it's almost no resistance because it's a nice long as a tradable void. And if you notice, there was a little blurb there that said, see prior event. I did an event called, about, 2 months ago, guys? Called, I don't even know what it's called, Tradable Voids and Other something, other misconceptions, something like that. And for those of you who are a little bit newer, there's a free stuff page, and the prior events are all on there. And you can feel free to go. The free stuff page, I think, has become one of the most immense things on the internet right now. So, I mean, if you want to spend an entire week looking at stuff, feel free. It's called Voids and Other Confusing Topics from October 9th. And this is one of my favorites because this is something that, again, I think is partly misunderstood. And in many cases, I can't blame you. It's simply taught wrong. It's simply taught wrong. See prior event. The answer to this question is A. There will be a huge amount of resistance on the daily chart from the prior week. The answer to this is A. The greatest resistance areas are created from fast moves that trap longs, causing them to sell on rallies. It is not until a full transfer of supply occurs, in other words, the sellers are evaporated, diminished, been bought from, as observed in the ongoing bull-bear battles, that this area will be officially retraced, if ever. So here's the chart again. And what we're saying is there's this misconception that people have this look to the left thing that is just a very Mickey Mouse way of even trying to understand a chart. Because there's nothing here, that does not mean there are no sellers. See, what is resistance? Resistance is sellers, correct? Does everybody agree with that so I don't lose you? Does that make sense? Resistance or supply, same thing. Hey, Nina, how are you? I remember you. You were in the trading room for 2 weeks. Right? Resistance is supply, same thing. That is sellers. So what I always like you guys to do is if you're listening to somebody else, ask the question why a lot. Ask the question why. Because if you understand charts, you should be able to answer every why question, right? So the question is, are there going to be sellers here? Well, what brings about sellers? Well, there's people who maybe want to sell, right, because they think it's a good short. But there's also people who maybe kind of have to sell. Who has to sell? Well, it's a matter of who got trapped in this position. Does it make sense to you that if you were long up here, right, at the end of this day, look at this, we're in an uptrend here. Does everybody see this? We're in an uptrend of some kind. We don't need to see the whole chart, doesn't matter. But we are in some kind of an uptrend, right? And you go to bed with your shares and you think, ta-da, what a great position, I'm up $800. And you wake up the next day and you're down $3,000. Now you're down $4,000, now you're down $6,000, right? When you start to rally back and now you're only down $3,000 again, what do a lot of people do when they're in tremendous pain and they start to get some of that pain relieved? What do people do? They sell. Yeah, you see, these fast retreats from areas, gap downs, huge red bars, are the greatest resistance areas on the chart. Does that make sense, everybody? And feel free to argue with me if you care to, but it's kind of like, arguing about if the sun rises in the east or the west. And I know this is confusing because this has often been taught incorrectly. Now, there is a time where this can become kind of a beneficial thing, but that's not until all the selling has been absorbed. So you have to see that, and this is what I call, anybody know what I call this? When things try to pop and then they get slapped down again. They try to pop, they get slapped down, pop, slapped down. Anybody know what I call this? You probably heard me say the term. Certainly people in class with me, I use it a lot because I think it's a great analogy. It's the whack-a-mole. You ever see a kid's game where the little weasels pop up and they hit them? Yeah, this is what a whack-a-mole is. Yeah, it's when you have this area and you have tons of sellers up here dying to sell. And every time you get a little pop, some of those people sell. So if you've been trying to do this type of pattern and you're having a hard time with it, this is why. This is a very low odds thing. Now again, like I said in the opening slides, if you go search the charts tonight, I'm sure you can send me one where this came back for whatever reason. It can happen. Things happen in the market. It can happen. But I'm just saying, generally speaking, this pattern is going to get selling. And you want to see the proof that all the sellers from up here have disappeared. And you see that when the whack-a-moles end, so to speak. And then there could come a point in time where that void could become a bullish thing, but it's never immediately afterwards. If you're confused, think about it this way. Most of you, if you've studied anything in technical analysis, when you have a big red breakdown bar, everybody, is that bullish or bearish? I mean, this is probably just right out of the Cracker Jack box of technical analysis, right? Big red new breakdown bar is bearish, right? How can you turn around the very next moment and say, well, now I'm bullish? Does that hit home with some of you? Why is this example here? Because it's one of the more common things I see. People send me charts and help me with this and what did I do wrong? And this is one of the common things I see is just, well, I thought it would come back. Okay, I thought it would come back is not a strategy. It's why people lose money. Good job. For this one here, I pulled a slide right out of the seminar. Sorry, just that. Oh, there's the ongoing thing, right? That pop, just sold, boom, okay. And naturally, just to add a little addendum there, it said on the prior slide, absent any other information. Naturally, there are things going on that may counteract this. There are things where you could say, okay, yeah, some people got stuck, but you know what? Overall, this chart is still very powerful. I'm just saying, absent anything else, that is a big negative, not a positive to being bullish. Here we rally up several bars, form a topping tail. A pullback begins. For this question here, I'm going to suppose that we went long on this pullback right there. Okay, we went long. We're bullish. We're going long in a pullback in an uptrend. And we want the stock to go higher. Pretty simple so far. We move up, we move up, we move up. We're kind of asleep. We're just sitting here watching reruns of the Dukes of Hazzard on TV. And all of a sudden we look over here and we go, oh my gosh, I just ran into a topping tail. This is what we call a topping tail. It's a tail, more than half the bar is a tail. It's a large size bar. Okay, everybody have this situation here. So I'm going to freeze it in this moment in time. We're long. We have all our position. We look over here. We say, oh my gosh, I wasn't paying attention. There's a topping tail. The question is, what do we think about that topping tail? In the prior chart, running a topping tail when you're long. A, you think, great. That's the best thing I could want if I want the stock to go higher. You think B, I'll stay with the position but get ready to exit and make a note to check the prior high next time to make sure it's not a topping tail. Or C, you exit with profit to avoid the bearish topping tail. Anytime you feel like it, go crazy. I'll go back to the chart there, keep talking while you're thinking there. We entered here, we run up to here, we want the stock to go higher, we look over, we say, oh boy, there's a topping tail at the prior high, didn't realize that. So what do we think about that? A, this is great. B, I'm going to stay with it, but I'm really going to be careful not to do that again. Or D, just get out of Dodge as fast as you possibly can. All right, here we go. You ready? And again, I mean, to this, there's not much discussion. Absent any other information, again, that prior high could have been some other major high on the chart, but absent any other information, just what you have to see here, the answer is A. And again, I have this out here because this is a misconception for a lot of people. A, when you buy a pullback in, let me ask you this question for those of you that are confused. When you buy a pullback in an uptrend, what percentage of the time are you going to encounter the prior high? If your stock, does go higher. Yeah, 100, right? 100. We're always going to run into something, right? The only way you're not going to run into something to the left is if you're buying a new all-time high. Obviously, I think most of you know, you don't have to buy a new all-time high to have a bullish pattern. As a matter of fact, a lot of time all-time highs are not even bullish. They get selling even though it doesn't appear to be anyone there. But if you're always going to hit something, the question is, what do you want to hit? A single pivot prior high is the least resistance area that there is. In other words, this is the best thing you can have. It says if an uptrend is higher highs, ... In other words, an uptrend by definition means you're going to make a new high. The question is, what do you want to see at that prior high? And the answer is, we want to see a very simple up and down, just not a collapse. What you don't want to see, you don't want to see a situation where we tried to go higher, we sold off, we tried to go higher again, we sold off again, because this brings in people on the wrong side of the trade again. And then some of those people are in pain, and then it creates an area of congestion that people want to sell into. Congestion is bad. Single prior pivot highs, and that's what this means. This is we call it a pivot high and inflection point. Just that simple little thing where we're bullish, we're bullish, we're bullish, and this is, let me take some profits, let me take some profits, let me take some profits. Okay, we're bullish again. In other words, the weak hands got off, or the people who wanted to take some profit got off. And we're not seeing major selling. We're not seeing a situation where the trend is likely to change. I always feel that by instinct, there are kind of two types of traders. There are people who like doing breakouts because they're fearful of anything to the left, and there's people who like pullbacks because they'd rather get in at a bargain price. Do you guys feel, well, let me ask you, breakout, pullback, or both? What in your gut, what do you prefer? What do you prefer? I'm not saying what's right or wrong technically. They're both fine. I'm just saying there's a gut that people have. I do. I have a gut. Do you prefer pullbacks or breakouts, or you're just totally comfortable with both? Learning to do both is a good thing to do. And it's not what do you want to do. The question is, I mean, just seriously, psychologically, in your gut, I believe everyone has a fear of one or the other. I mean, I like pullbacks. I like pullbacks. I like the bargain price. I believe that the power of the pattern will take me to the new highs. And like I said, even if you're at new all-time highs, it does not mean you're going to go higher. As a matter of fact, is that coming up next? Yeah. And after the next slide, I'll show you an example of another one too. Okay. Well, a lot of this becomes kind of to a psychological level. You got really burned with a trade one time, and ever since then, it's that self-fulfilling prophecy thing. You look for the failures of breakouts or whatever it is, and you see them, and then you keep reinforcing the fact that they don't work, or vice versa, whatever it is. So, but if you are buying pullbacks, the point here is this is the ultimate chart. This is what you do want. And I think you notice, and again, nobody knows anybody in here, but an awful lot of people did not agree with that answer. Notice I said did not agree rather than just they were wrong. Question number 4 is a chart question. Here we have a pretty consistent sideways pattern, and this is a 5-minute chart. Sorry, it doesn't say that here. It should say it's a 5-minute chart. Here's the beginning of a day. We have a big congestion area here that held, right? Now, this next day, the opening bar is going to break below this gray line all the way to that arrow. See that arrow there, everybody? That's where the next day is going to break down to. Everybody understand the chart? 5-minute chart. You're seeing the whole prior day. The opening bar of this new day is the bar in question. The bar is going to break the entire prior day. So we're breaking the low of the daily bar, and we're breaking that very significant area that held. We're going to go all the way down to here. And here's the question. On the prior chart, breaking below the prior day's consolidation, absent any other knowledge or time frames, is a good short because it broke multiple pivots, and the prior low of the daily chart is a good short because it broke the prior day's low on one 5-minute bar during the 9:35 reversal time, is never a good short due to the width of the base. I'll go back and redo the whole thing. Here's the chart, and basically we're going to say when you're down here, this is a good short, either because you broke all of these pivots and the daily low, or it's a good short because it's going to do it on one 5-minute bar, or it's a good, or it's never a good short because this, by width of the base, we mean this area from here to here. It's a very wide area from there to there. So go ahead whenever you feel like it. A, B, C. I think I've done an excellent job asking these questions, if I say so myself. You like the self-imposed compliments to the moderator? Joe, this is not a no way to know. This is multiple choice, give your best answer. And there is, to me, there's a definite question. And again, I understand, I'm not saying you have to, I'm not saying if you picked A or B, you have to be in the trade. I'm not saying if you pick C, you could never be in the trade. I'm just saying, what are we thinking? That's the question, Joe. What are we thinking? Are we thinking, wow, you know, get me in, or I'll get in, or I'm already in short? Or am I thinking, oh, no way? And before I even give you this answer, folks, again, I want to emphasize that I have no motivation to trick you. There's nothing here except I'm just showing years and years of experience and things that I do every day. And this to me is, again, I pick these because to me, I tried to pick the most common things I see people do that I think are an issue. The answer to this is C. This is never a good short due to the width of the base. There is no exact bottom to a base, especially a wide one. It is the reaction to the base that needs to be monitored. This is perhaps the second greatest mistake made by traders. See, when you have a wide base like this forming and you keep bopping up and down, here's the question. Is that a short? And the answer, I'm sorry, is never. It is the worst entry in history, even if you're right. Because for one thing, where's your stop? Your stop's up here? Your stop's up here? I mean, you have to drop another whole day's trading range just to make one risk unit? And let me ask you this. Here's the big thing. What if this is the pattern? What if this is what happens? When you look back at this chart, do you say, listen to this, do you say, hey, that was just a sideways pattern and it went a little lower one time? Is that what you say? Or do you say, wow, the stock broke down and then through some miraculous recovery came back, right? And forget what I'm telling you, just look at charts, folks. Look at charts. And I can really make a good proof on this one because guess what? You know what I'm going to say next. Whoops. If the chart supports it, this is actually a great long entry. This is CTSH. I played long February 13th. That was last week. Anybody in the room? Do you remember? This is a tough memory. Do you remember this? CTSH? I went long this. Anybody remember? This is a week ago. And by the way, I always tell you that I like to get charts from recent trades I did, right? Cosmo remembers. But keep in mind, a lot of what I'm showing you today is what's wrong. So I couldn't find a chart because these are what I call bad concepts. This one here was a trade I did long, and I realized at the time I did it that some people may be thinking, hey, that's a short. We broke. Well, you're right. You're right, Milan. I agree with you. It's not broken down. I agree. It's not even what I would call a breakdown. That's why I'm saying this is the second biggest mistake. Did I even, what words did I don't think I used that words. Yeah, I just said they're going to break below 1. And you were absolutely correct. I mean, this is actually a long if the rest of the chart supports it. Now, what do I mean the rest of the chart support it? Well, if we're in a downtrend, I would never go long on the break of support because there is no support. But in a sideways uptrending pattern, the break at this wide area like this, especially at 9:35 reversal time, is actually a long. But here's the point of this: whether you like it long, this is a aggressive, but this is a great entry. See, this is what you have to learn in my mind to make money. If you're going to short here, I don't care if you're right, you're not going to make money at the end of the month. Do you understand what I'm saying, everybody? Even if you're right. See, there's a saying that I love, and it's that it's not about being right or wrong, it's about making money. And if that's the best entry you can come up with, where you have to have a miracle trade to make a little bit of money. See, when you get in, if you're going to short this base, you have to short it up here. Does that make sense, everybody? Wide bases like this, you do not play like Milan said. You don't play these to break out or break down. You play them to stay sideways. So if you're playing to stay sideways, there's only one spot to short it. Where do you short a wide base, everybody? At the top. No, not under support. At resistance. You never short it under support, a wide base. As a matter of fact, this, language some of you probably recognize because it's not unique to me, but this is like what we call a stage. If it is a top, you would call it a stage 3. There's a rule I have in class. I say 30 times, right? Seminar students, somebody. I say it 30 times that you never are allowed to short the bottom of a stage 3 or a wide whippy base. Never. I don't care how it does it, when it does it. You take the next entry because they would fail more than they ever work. The only spot to short, Joe, is up here. Under support is the breakout. Here's support. You're under support. To me, that's hitting support still, but there's no breakout concept. Right. That's another way to look at it, Diego. Is that support is an area. It's not a glass plate. It's a rubber band, and you have to see how it reacts when you test the area. But again, I literally went long. Boom. Well, it's good to be a breakout trader, Joe, but you have to play breakouts. This chart is never eligible for like right here. Let's go the other way. Do you think this is a good play to be long right there? Do you think that's a good play to be long right there? Anybody? Never, ever, ever, ever do you go long there. And I don't care if it works. I don't care if it doesn't work. You never go long there because that is a terrible entry to what may or may not be a good strategy. It is the worst entry conceivable. Now, there are times you can play a breakout and you can play it over the top, but not something that looks like this, not a wild and whippy base, because the top of this base is going to get sold. It's guaranteed. Okay? Now, again, like I said, I am not teaching a technical analysis class here. I'm showing you some extremely common mistakes and saying we're looking at 1 5-minute day of one chart, and naturally there's other considerations come into place here, but I'm just showing, I think, the concept is clear I'm teaching, isn't it? The concept is clear what I'm saying here, right? Exactly, Dip. Exactly. That's another way to state it. You never take 110% retracement and continue to play in the same direction. Never, right? Well, again, hopefully, and what if you really are trying to learn on your own, what I suggest you do is look at this on tape when it comes out. Look at it on the video. And go through and find these things in charts. Find examples of this stuff. It's not hard to find, right? And just be open and go through charts. If you want to kind of try to self-teach yourself a little bit to some extent, go through and if you're day trading, take a 5-minute chart and back it up and start scrolling through and just saying, what would I do here? Boom, retest and failure, I'd go short. Boom, boom, boom. And look, and just keep scrolling through. And these concepts will start to appear to you. And you say, look at right there. Again, if you went long there, stupidest entry in the world. I don't care if you're right or not. I don't care if the Qs went higher after that. You will never make money if that's how you trade. Never. There's not that much room to be sloppy in the market. We don't have that great of odds. We have just enough odds to make money. And if you throw away all of the edges that you have, you won't make money. You just won't. Does all this make sense, everybody? Are there any questions on the prior charts? I have one more question for you. And this last question actually doesn't have a chart associated with it, but yet I think it's an important one. Next question. Yeah, you're going to like this one. The U.S. stock market is rigged. True or false? Nothing else to describe. That's it. U.S. stock market is rigged. True or false? Sunil, you want to show me an example of a void that's tradable into. If I don't have time to pull it up by the end of this, you can email me and I will certainly show you some. They are hard to find though, because your initial reaction is you don't, but I could probably find one for you, right? Define rigged. Well, Cosmo, you have a really good answer, because this is one time that I think I said it somewhere, the answer to this may be partly semantic. Is that the right word? Right? Semantic, right? You know, depends how you interpret words. But there's really an important point here I want to make, and that is this. The answer is B. It's not rigged. Why is this question here? Well, simple. Whatever happens shows up in a chart. Think about this for a minute. Whatever happens shows up in a chart. There's one thing that cannot ever be lied about in the market, and that is that when a sale goes off, a price prints on the tape becomes a chart. Okay? So we have that in front of us. Those who do not know how to make money will blame anything that they can and will often use that excuse that the market is rigged. Now again, I don't want to insult anybody. I'm just simply saying that I see all the time that people, their first attempt to learn something, they don't do well, and what do? They look for what's a common excuse? Well, the market's rigged. I've actually had people say that the market or the market maker saw me do this and they took me out. That's what they said. Do you understand the insanity of that comment? There are how many millions and millions and millions of shares trade every day? And you, with your 100 shares of Roku or whatever, you think somebody's looking at you to try and make 13 cents from you? You're just in Insaneville. The market is not rigged, but what it is that you're competing against other people who do tricks and things to try and get money from you. And that's what you do too, right? You're tricky. You buy the bottom of a base when it breaks down. So, and let me give you two quick examples of something, okay? Let me tell you something that you may call rigged, and I just call it, well, it's part of what the market is every day. Do you know that at 9 o'clock, the market makers and specialists, the people that run the market, so to speak, that they get buy and sell at open orders? Are you aware of that? In other words, people are going to go golfing. They say, hey, when the market opens, buy Roku for me. Just buy it at open, right? So they may have 10 or 20 orders lined up to buy Roku and 10 or 20 orders to sell Roku, right? And if they wanted to be nice, fair people about it, they could execute a buy order, execute a sell order, execute a... But you know what they do? Guess what they do? Can anybody guess? What would you do if you were a market maker and you had 20 buy orders and 20 sell orders? What would you do? Well, whatever, I'm going to do it the other way around, Chuck, but no. Hit all the sell orders first. Sell, 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 right? Drive the price down for a few minutes, and then guess what? Take some shares long yourself, and then execute order the buy orders. Buy, 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 buy. Doesn't that make sense? And that's what happens. That's what forms the, ready for this, watch the screen. This is what forms the 935 reversal time. Now, there's two ways to look at this, right, Joe? You can look at this and you could have gone long that stock because it started to move up and then you just got whacked. It just dropped incredibly for 5 minutes and you go, market stinks, it's all rigged, I quit, right? Or you can sit back and watch this event time and time again and say, hey, you know what? This happens pretty often. How about if I watch it happen and jump in with the market maker? How does that sound to you? So is the market rigged, or are people just doing what they do and you have the ability to follow along because it's all happening in a chart in front of you? Does that make complete sense, everybody? I'm really big on this because I really get frustrated when people start talking about a rigged market and can't make money and can't do this and can't do that. It is what it is. But look at here. What was this? This is exactly what I'm talking about, right? So somebody here could have jumped in long because they think this is support, right? And then got all mad because they stopped out. Or you could understand there's something called a 935 reversal time, and this stuff happens, and that the prices often run in the opposite direction the opening few minutes. And if you have a very bullish chart and you run it down into or even beyond the support area, it can be a great buying opportunity. So, tomato, tomato, the market's rigged, or the market is simply operates as it does, and you can take advantage of it or not. For years, everybody came to, the HFTs. Here's number 2, right? HFTs are so meaningless in the market today, to me. They're not even worth talking about. Now, when they first came out, they made a big deal. And the thing you would hear the losers say all the time is, oh, the machines took me out. You ever hear that expression? If you're in a trading room or you're talking to somebody, you wouldn't hear this unless you trade fairly often, but the machines took me out, right? Well, again, that's loser talk, right? If every day, and this is what happened 6-7 years ago, right? Stock could be consolidating. During lunch, the market's bullish, the stock is bullish. All of a sudden, the stock would do this, bam, bam. That was the little HFT shakeout. And of course, the losers would be long this stock during lunch, get stopped out, and then say the machines took me out. What does a winner do? When this happens every day, what does a winner do? Maybe you don't do it on day 1, maybe you don't do it on day 2, but after you get hit in the head 5 or 6 or 7 times, you kind of stop walking into the same door frame, and what do? You decide, hey, I'm not going to get in here. I'll wait until this event happens, and I'll get in down here and play with the people who are making money rather than continuing to beat my head on the door. And that's why what I try and teach is called the language of charts to me. Because if you understand what's going on, you can adapt, to anything that's happening. There is no, and that's why another one of my favorite P's is when people say, oh, this is a different market, you have to learn all new strategies. That is the one of the most frustrating comments in the world to me. You don't have to learn new strategies. You know how to read a chart, and maybe you have to adapt to some changes that happen from time to time. But there's nothing new to learn when you understand how to read a chart. Now, if all you learned how to do was to short a head and shoulders pattern, and that's all you know, well, maybe you do need to learn new strategies because that's going to work for about 6 seconds. I mentioned on one of the slides, the intro slides, that you really need to understand 3 things in the market, because number 1, you don't just need technical understanding. You need superior technical understanding. You need to really understand what it means to understand a chart. Most people, and it's not hard, but most people never really learn it. They just really never do. I've seen complete classes that you could go through and still wouldn't know how to make money because they never really teach you anything more than just the basic stuff, enough to get you in a lot of trouble. But even when you know this perfectly, I don't feel it's enough. There's a thing that I call math and probabilities that to me enters into it a lot. It has a lot to do with that statement. It's not about being right, it's about making money. It's about that statement. Somebody may teach you can never take a trade unless you have a 3-to-1 reward to risk ratio. Really? What if I told you had a 90% chance of getting a 1-to-1? Would you take the trade? I think all of you would say yes immediately. Well, then what good is the rule you just learned? See, there's a lot to this to me. And then because think about this, because we don't have 100% ability to read a chart, it's never going to be that accurate. It brings in psychology, right? Because you're not going to be, does that make sense, everybody? Because you're not going to be right all the time. And that's why it's so important that you don't buy the top of a wide base. Because you're only going to be right once in a while, and you're never going to make money doing that. And I know you can email me a trade you did and it worked. Congratulations. Don't care. You're not going to be around in 6 months. I know it for a fact. Questions? If you want to continue to learn on your own, hit that free stuff page. If you at some point want to take up the seminar program here with me, I teach it, only I do, and I don't think you'll be disappointed, but you got to be ready for it. Here is the details on that if you're at all interested. That is going to be starting February 29th, a week from Saturday, technically a week from Friday, okay? An on-demand program. You mean like videos or whatever, Sunil? There's going to be a home study course for my 3 seminars, or part of the seminar program, that's going to be rolled out starting next month. Yep. I've decided that is the best next thing I can do. I also not only offer but insist that you retake the classes at least 3 times. And then if you do then sit out for a while, do you come back for another time after a period of time? Any questions? Anything I can look at? It's 6 o'clock. That's on. I haven't looked at the clock the entire time. What an unbelievable. For those of you, a quick comment, because every time I mention this, somebody goes, Paul, why didn't you tell me this? About 6, 7, 8, 9 months ago, maybe a year ago, I introduced, for those of you who want to day trade and you don't have the $25,000, I am not running a prop program, but I have I think, a great place where you can be trading in 48 hours. There's no tests. Your money's secure. US 10-to-1 levers, 95% payout. If you're interested, email me, and I will send you the details on it. Again, that's if you need, because day trading requires a $25,000 account, and some people don't have that. And if you want to combine that with the seminar program, you can do that, and you get a little bit of a break there. You can talk to me about that. Any questions, anybody? Oh, you're asking, does the class include options? That's a great question if that's what you're asking. Okay. Really important, Diego. Actually, part of the seminar program, I don't mention all the time, but every 9 to 12 months I do an options class as well, Diego. And there's actually one coming up, I think, in March. But here's the important thing, Diego, and for everybody, really big thing. You can't trade options, Diego, I mean, in a vacuum. An option is a derivative of something else. If you're trading stock options, you have to understand where the stock is going, and that's where the learning comes in, right? The option part of it, I throw in as a class, because you should never, ever take a class or pay for a class on trading options, because that is something you can learn on the internet. It's just math, Diego. It's just math. Reading a chart is a good deal of art that you need to learn, and I think it's tough for some people to learn it. But once you know, if you want to be bullish on Microsoft, right, you can buy the stock. That's one way to be bullish. You can buy deep in the money options. You can buy at the money options. You can buy out of the money options. They all options do really, Diego, is just skew the reward to risk parameters. You can sell in the money puts, out of the money puts, at the money puts. If you sell puts to be bullish, you can be right an awful lot of the time. You can have the stock go down and still make money on a bullish position if you sell puts. But when you're wrong, you're going to typically lose 3 times what you make. But there's a lot of great strategies, but all of them involve that you know where the stock is going, right? So you got to learn the stock first. Learning the option is no problem, Diego. That's just a piece of cake. And I'll even, like, if you're confused, something I promise my students, and some of you here, I'll get in a room with you and we'll talk about whatever you need to. I'm just, like I've said to people, I'm just in that time in my life where I'm having fun doing this, and I'm committed to making successful traders. And for some of you in the program, if you want to speak up, you've needed help, we go into a room, whatever you need. I want you to go through the program first, of course, but then whatever you need to be successful. And if you're having trouble figuring out options, it really is a piece of cake, but it's getting the chart down that makes sense. Okay, and thank you guys all for all the compliments there. Thanks, Milan. I appreciate it. Thanks, Davis. All right, have a good one, guys.